Hey everybody, welcome to the morning market briefing. It is May 20th. It's Friday, 2022. We do have a very special guest joining us here momentarily. Tom, are you excited?
Yeah, I'm super excited. Super producer Jonathan Hicks is going to sit in, just chop it up with the boys. So if the sound levels drop and or the camera falls off, it's because he's over here and not over there.
And if you guys think he's a good producer of a podcast, you should see him do compliance work. Jonathan is our chief compliance officer. He's going to start hopping on the calls a little bit, having a little fun with the boys.
Is this thing on?
I don't know.
That's a great question. Let's ask the producer.
He doesn't show
no
up.
producer. But yeah, we got Hicks here. What's up, man?
Not much. Ready to hop on?
Yeah, I'm about to sneeze. Y'all bear with me.
Okay.
Woo! Normally Hicks would mute that out, but we're just going to roll with it. Let's jump in. Markets are up nicely on a futures basis. Good to see that. Little green to end the week. We'll see if it holds. Dow futures up 87 basis points. S&P futures up 1.1%. NASDAQ up 1.5%. Gold is up. Silver is up. Oil is up. A lot of green right now. What are we seeing in rate world?
Bonds are down just a touch, though we've had really strong week. The 10-year was up close to 320 as recently as 2 weeks ago. We got all the way down to 276 yesterday after the jobs number came in, and we're just selling off a little bit here, but we're seeing a lot of strong demand for bonds. And I think people are at a point where equities are down so much and bonds are down so much that they feel like bonds are a pretty good investment at this point. There's a big article in Barron's this weekend. They got sent to me by a number of clients that was saying munis are historically cheap. They sold off more than they did in 2008, and this is the time to get in, which I would agree with. So we're seeing a little bit of strength there finally. I think we've, at least for the short term, seen a lot of the carnage wrap up in bond world. We've got the rate hikes coming, which could potentially lead to an inversion. We have seen some flattening, but we're just going to roll with the punches and find the value. But for the time being, we're seeing a little bit of relief there.
It's been, you've been grinding on the fixed income side. It's a weird opportunity in that I think we do a decent job of really educating clients in terms of, hey, we make money on the buy on the bond. If we buy a bond, assuming they don't default, which we really have not had struggles with historically, assuming the bond doesn't default, like we basically know what the investment return is. So it's kind of a weird dynamic though, with maybe people who don't totally follow that nuance. They're saying, why are my bonds down? Meanwhile, we're like, oh, it's a great time to buy bonds. And so it's kind of this give and take, but I think what we've been able to do and what we've been able to pick up is, frankly, kind of encouraging. It's the first time in my career where it's been like, wow, these bonds are kind of cool.
Yeah, we're getting a ton of redemptions on 7/1, which is a big redemption day, but a lot of the bonds are coming off the board. We're seeing a lot of bonds called early, and every bond that comes off the board, there are replacements that are bigger and better. And on top of that too, we're seeing every day we get credit status changes, stuff getting upgraded. Shout out to Andrea. She's on the call. Macon got upgraded this morning. One of our most beautiful towns in Georgia, right?
Yeah.
People agree that's a cool place to come from. So he got upgraded, which is good. We have a lot of exposure to Macon bonds. A lot of that is older. And so those are good bonds that are getting upgraded. New York, California, all over the place, we're seeing upgrades. So, even though the prices are coming down, it's going to be a U shape, right? Because you see the dip, but everything's got to come back to par eventually. So it's really just temporary, and everything new we're getting is better. And we're locking in it. Depending on your tax rate, upwards of a tax equivalent yield close to 7% on stuff that's
crazy.
You just never see that. So it's not all doom and gloom. We're locking into gains for, the next 10 years on a lot of these things. And we're not really going to have to worry about defaults because everything is getting cleaner.
So we're talking about rate hikes here. China's actually cutting rates, cut its benchmark rate for loans of 5+ years from 4.6% interest to 4.45. Pretty big reduction, biggest reduction they've had since 2019. Obviously trying to juice the economy there. It seems like it might be easier to just let people out of their homes than to cut rates, but that's where they are. Tom, do you think that'll have any impact on the bond market here domestically?
Well, they're kind of in the middle of a rock and a hard place. And we talked during the summer last year about yield curve control. And that's really more how the PBOC, the People's Bank of China, operates, where they have different levels for different lengths of loans that they set, as opposed to just setting the, what we have is the Federal Reserve rate, which is very, very short term. They set a 1 year and a 5+ year rate in order to kind of maintain their curve where they want it to be. But the problem is everybody else has turned very hawkish and the tap is turning off, and they're in a position where they've locked everybody down. Their economy is just ground to zero with all the lockdowns, and they've got to get into an easing mode. But the problem is if they do that too much, no one's going to want to invest in China because everyone else's rates are getting better, and that puts them at a strategic disadvantage. They want to cut into the market share that the U.S. has in terms of reserve currencies and in terms of debt demand, but they're not going to be able to do that if they start cutting rates and everybody else is hiking rates. Then money's going to flow away from China, and that is going to exacerbate their problems. So, I don't really know what they're trying to do with the zero COVID policy, but it's not working very well for them. In the Wall Street Journal article this morning that talked about this rate cut, they were saying that not a single car was sold in Shanghai in April, not one. And, it's not like there aren't a lot of people there. There are plenty of people in Shanghai and not a single one bought a car. And so that does not bode well for China's economy.
That's just a wild data point. Yeah. I kind of like everything that comes out of China. I don't know if I believe it, but
I mean, how many people live in Shanghai? It's got to be in the tens of millions, right? And not one car. It's crazy. I mean, there's probably cars sold in, shout out to some of our more remote clients, Glasscock County. I bet there was at least one car sold there, and there's probably only 1,200 people who live in that county.
That's Hicks. I mean, weigh in on the car situation in Shanghai, because that's wild.
Yeah, that's pretty crazy. I mean, I would feel like at least the small vehicles would be like
somebody needed one.
Yeah, like the Tata Motors of the world.
Yeah, not even the government. The government didn't buy a car.
Right.
I mean, shout out to Tata Motors. We used to own some Tata stock.
Really?
Back in the day. Yeah. Well, that's like internship Andrew days, 08, 09, that kind of time.
I see a lot of bumper stickers about saving the Tata, so I guess that must be what that's about.
Yeah, I think a very powerful response to the Shanghai automobile situation.
Yeah,
we're trying to get them sold. The GOP is leading legislation to try to break up Google's ad business. Interesting to me that this is coming from the GOP. What they want to do is they want to make a rule that if you process more than $20 billion in digital ad transactions, you can't be on both the purchasing and the selling side. So Google makes tools that allow you to buy ads as well as sell ads. They're basically saying, hey, you can't be on both sides of this. It's kind of one of those things that in a way sort of makes sense, but I guess maybe just the laissez-faire capitalist in me is like, if you don't want Google to do this, somebody else needs to innovate and come up with a better way to do it. I think the biggest thing to me is that it's coming from Republicans leading the charge, because traditionally Republicans are the finger is probably pointed at them for favoring big business above individuals. They want to protect big corporate America, and that, at least in this case, is not true.
Yeah, I think it's interesting that it's co-sponsored by Amy Klobuchar. I mean, talk about two totally different, worldviews between Ted Cruz and Amy Klobuchar. But I mean, I think there needs to be some regulation there. I think there's a lot to be said about, what's going on in the digital ad space. It's been sort of a hot button issue really for the last 5 years with, Facebook and everything. And I mean, you can see it having a 15-month-old child, like she just gets sucked in if there's a commercial on TV, and it doesn't really matter even what it's for. She has zero interest in regular programming, but as soon as, the Peptiva commercial comes on, she'll just full stop and stare at it and smile, which is like, makes you wonder what all's in that advertising that's drawing the attention. So I think some regulation there is probably,
Molly's asking her daughter if, certain medications are right for her lifestyle.
Yeah, exactly. Yeah.
Her first words. Yeah. Is this okay for me to take? Citi is taking Amazon off of its top pick list. Probably are a little bit behind on this. I mean, one thing we kind of laugh about, we have analysts internally where we do stuff, and we try to, obviously we read out all the analyst coverage that's put out there by the bigger firms, but there's just kind of this laughable trend of analysts seeing a price drop and then saying, you know what, I think the price is going to be lower than what it used to be. And this kind of waterfall happens. So Citi now says Amazon is not a top pick now that it's sold off quite a bit to start the year. Tom, you surprised?
I'm not surprised. I think at a certain point, once things come down, you have to move those numbers, even though you could be as convicted as you want, but your credibility is on the line. If you say the stock target is $3,000 and it drops to $2,200, at a certain point you have to say, hey, we've got to readjust these targets. If anything, I think it might actually be bullish. I mean, a lot of times when you see, companies go from being a top pick to not being a top pick, or something like Alcoa getting dropped from the Dow because it's not, the biggest, baddest company in the world, because aluminum is not as prevalent as it used to be. It's usually pretty bullish because people stop looking at it, stop having eyeballs on it. And that's when you can start to get to a point where it's maybe a better buy. But I mean, it's just a day late and a dollar short. It's very reactionary. And, a lot of times you see that with analyst stuff, and, it is what it is. So, when you see a stock up 5% because the analysts upgraded it, that's usually because they're behind the price. And it's not necessarily as bullish as you think.
Yeah, and Amazon's actually up about 1.6% pre-market. So City kind of nailed it.
Yeah.
Wild week here, Hicks. Any takeaways on the week?
This week?
Yeah.
So we've been pretty busy, it's been pretty depressing here. I would send some warm wishes and love to Ben Nye.
Yeah, Ben's made himself sick.
Did we address him this morning? What's happened to him?
Ben's under the weather. He came in, he looked
rough.
He looked like death. I told him that I did not want him in our small studio space for the call. And he was just kind of hunched over his keyboard, and I said, "Go home, dude." And so Ben went home. Ben, we can give him a hard time because no one works harder than Ben.
It's accurate.
It's 100%.
I think he's absolutely sick.
It's
but
his body.
I think his body's just shutting down.
Yeah.
So thoughts and prayers with Ben. Quick recovery. Hopefully he gets some rest today, some rest over the weekend. Everybody else is here. Business as usual. Hicks is keeping us all in line. And we hope you guys have a great weekend. We'll wrap it up a little short today and see you guys on Monday.